We're going to transition a little bit here, get a little bit of
Yes,
volume
sir.
profile. What's going on, Luis? Love this indicator volume profile.
Yes,
Let's
sir.
rock through this volume profile. We just got a couple slides. So volume profile, it's a trading tool used to analyze the distribution of trading volume over different price levels. Like traditional volume indicators that show volume traded over time, excuse me, the volume profile highlights the volume traded at each price level, providing a clearer picture of where significant buying and selling activity has occurred. This might sound really familiar. I've talked about this 1,000 times, but this is a textbook definition of what volume profile is. It shows you where a lot of the volume was traded on. Not only that, it shows you where how much volume was traded. It shows you at what price levels a lot of that volume was traded. So before we go to the next slide, you got any questions so far?
No, it seems cool. I see you do use this quite often. So
number 2, traders use volume profile. I meant to change the title here, but how traders use volume profile. Number 1, to identify key levels. So the number 1, we have high volume nodes, which you might see in parentheses right here as HVN, abbreviated that way. But these are price levels where a large amount of volume has been traded. HVNs, high volume nodes, indicate strong areas of support and resistance. You also look, I never really liked the term support and resistance. I just like to call them liquidity zones, because I think whenever you call it a support, people are automatically think, oh, so does that mean I can just buy because it's hitting a support? Does that mean I should just short because it's hitting a resistance? I personally don't like to think about it that way. So I personally would take that with a grain of salt. Make a little bit more sense here when we look at some examples, because there's a perfect example of that right now. I'm going to show here in a little bit. But anyways, you might hear it referred to as support and resistance, liquidity zones, areas of interest, all of the above. And then traders often look at these levels for potential entry or exit points, as they represent prices where the market has spent a significant amount of time and volume. Now, look, traders often look at these levels for potential entry or exit points. Personally, I like to use these mostly for entry points. I'm typically not holding my positions long enough for them to hit the next zone anyways. I usually am scaling out before that. But you can use them as both. And one of the best reasons, not even just in my opinion, but one of the best reasons for volume profile and finding those areas for entries is because it gives you great risk to reward. We can't dictate if the market is going to start trending up or if the market's going to reverse. We don't know what direction the market's going to take. So that's why there needs to be a little bit more of an emphasis on risk versus reward. And by finding these key levels, it allows you to find great risk to reward opportunities, because if you're wrong, you're going to be wrong very quick. But if you're right, there's potential for this thing to really run. Like, that's pretty much the goal. If you're trading directionally in the market, that's the goal. Yes, find areas in the market where you can get great risk to reward. And it's pretty straightforward. It really is just like that. You find areas in the market to find good risk to reward. And the reason why the risk to reward is so important is because of the nature of the market, the randomness of the market. So you have to lean on the risk to reward if you want to come out green at the end of a month, at the end of 2 months, at the end of the year. And just in the span of X amount of trades, you have to lean on the risk to reward because of the nature of the market, because of the randomness. So low volume nodes, we just talked about high volume nodes. These are price levels where relatively little volume has been traded. Low volume nodes can indicate potential breakout or breakdown points because they represent areas where the price moved quickly with little trading, often acting as support/resistance when the price returns to these levels. So it's just prices. It's easier for price to break out or break down from low volume node areas because there hasn't been so much trading activity there. So it's a thinner area in the market. Now, whenever I say thicker or thinner in the market, thicker is just referring to a higher amount of trading activity taking place here. Thinner just means there's a lower amount of trading activity taking place here. So in a thinner market, because it's a thinner market, its price is going to have an easier time to drive through those areas, which makes sense because it's thinner. Obviously, price is going to have a harder time trading through or breaking down a thicker area or price level in the market. And it kind of makes sense. So whenever you hear the term thicker and thinner, it's just talking about the levels of trading activity taking place. In a thinner market, it's easier for the market to actually move because there's not so many orders jamming the price, if for a better lack of phrase to explain that. But these are the first 2 slides. I kind of want to just kind of ease our way into volume profile. I feel like we described what volume profile is and why traders or investors might use it. And then we got into what high volume nodes are, low volume nodes, and then we're going to take high volume nodes, low volume nodes, and compare them to the actual volume profile so we can actually have a visual to attach this information that we just talked about to. So we'll take it piece by piece like that. So this is my process. All right. So with volume profile, depending on the software that you can use, you can get it to like, okay, I want for example, it's showing the volume profile here to the left, but it's like, how do you know? Like, how far back is this volume going? Like, is this over the last 5 days? Is this for just today? Is it whatever? So I feel like that's one question that should come to most people's mind is like, you should question whatever volume profile exactly over what time span,
the whole lifespan of the stock.
exactly. Is it the start of this month? Is it whatever it is? So anyways, what I like to do is before the market opens, I like to draw out where the average volume, the area where the average volume was traded on the previous day. Bada bing, bada boom. You can see the volume profile shifted, and I drew the area where most of the volume was traded from the previous day. So that's how I found where most of the trading activity occurred on the previous day. I marked that zone in there. And what I also like to do is I like to find where the average volume was traded over the last week. So what I do to do that, and go over here to chart settings, pull that up again, go over here, and then adjust. I go previous 5 days, and I just need to wait for it to populate. Previous 5 days, and then that's how I got this top zone up here, right? I was personally like, look, so you can see right here, and I can adjust this, I can pull this out. So you can see there's a lot of volume traded in 2 areas. Personally, I like to mostly pay attention to the area because look, you might ask, well, why did I draw the zone up here? And why didn't I not put another zone around here? It's like, you can put another zone around here. And I guess I could have done that. So what that would look like this, I like to just get like peak of it. I don't know the whole thing, just the peak where the most important part of it was traded. So, I mean, I could have done that too. But anyways, I'm mainly paying attention to the area where it has the highest volume node. And that's where you see this node down the middle that's yellow. You see that? The highest volume node will always be a different color. So I'll just look for that area on the chart, and then that's how I'll create my zone. So before the market opens, put that in and put in this very bottom one too. I'm going to take this middle one off just so it doesn't get confusing because we have so many on there. I just have to like remember that in my brain. Sometimes I kind of get which zone was which, and then I'll have to like pull my chart settings up and then go back and see, okay, that one was the previous day, that one was. So what would help too is if you just have like text thing on your chart, like Tasty Trade has it, you can just type in previous day VP volume profile, and then okay, last week's VP, just to like know out exactly what the zones are, because you might forget. This middle one right here is the current day's volume profile. So what I'll do to find that one is I go to chart settings again, go to CPL, go over here. I'll go over here, and then this time I click developing. So developing versus developing is current, right? And I put it back down to 1. So this is showing me the volume profile that's being actively. I almost forgot the word I was going to say. I was like, actively building right now. And then if this can populate, you can show you that's how I found that level. So I like to call these the initial balance. That's how I like to call them, like the developing days balance. I like to call it the initial balance because again, like these areas that we're drawing in, these are balanced zones. You can call them support resistance, call them whatever you want to call them, but these are where the price is balanced. These are balanced zones. So sometimes I like to wait for the initial balance to be created before I take any type of trade. But anyways, you can see real quick, a little anecdote. We can see price came down here, tested it, bounced a little bit, tested again, consolidated, and then finally broke down through the zone. I'm going to use this one as an example as to why I don't like to call these support and resistance, because like if you're someone trading these to support, bounced for a little bit, but it then ended up selling off anyways. Granted, I want to even buy off of the developing days volume profile anyways. So I'm going to get long off of something. It's going to be the previous days volume or last week, something that's a little stronger, something that has more trading activity that occurred, something that's thicker. So it might work. You might find the days volume developing. And again, this is now trading down at the previous days VP. I'm going to start saying VP. I'm not talking about vice president. I know it sounds like it. I hate saying the whole word volume profile, so I'm gonna just start saying the VP. So this is a previous days VP, previous days volume profile. As we can see right now, is it a coincidence this thing wicked down in it and bounced a little bit? Look, we haven't taken any, we haven't reversed.
Oh, sir.
We didn't break down to this level, but the fact that the price literally reacted,
it's just like it touched it. It's like boiling water.
It lets us know that it's valid. It's a valid area, right? If this thing just like were to just act like it's not there and it's not affected by it, I might be like, all right, maybe I didn't put that in correctly, or maybe this
just goes straight through
valid. Again, this is not to tell you, this isn't some magic indicator to let you know get long or get short, but again, gives you a good area to find good risk reward off of.